Hi, everybody. Thanks again for being a part of our workshop series. This is number 11 of the Arizona Economic Resource Center's 11 workshop series. You made it to the end with us here. My name is Nina. I work with my colleague Robin here at Local First Arizona, and our goal with this workshop series is to build capacity for folks throughout our lovely state of Arizona, to really start kind of addressing some of the gaps that we were seeing across our clientele of what they were working towards on different grant opportunities. And we wanted to use our wonderful team of contracted grant professionals to help guide us in this process. And so we get to dive in today with one of those subject matter experts. We have Jenny Marino here, who is here to tell us about federal grant compliance. I'm very excited for this, and I know that there will be a lot of information to take in. So just, take it step by step. Just a couple logistics for the meeting. Feel free to drop questions in the chat. We are trying to keep it pretty high level. So we might, if anything's too specific to your very specific need, we might say, let's reach out and talk about this separate from the conversation today. But feel free to drop those in.
Come
And
on, Mark.
with that, I will pass it off to Jenny and get us started.
All right. Thank you so much, Nina and Robin. And welcome, everyone. I'm genuinely glad that you are here. I know that your time is valuable. And so I want to thank you for choosing to spend your morning here talking about grants compliance. I am in sunny Tucson. So I saw in the chat there were some people in Tucson. My guess is that many of you here in the Southwest have been experiencing some of the monsoon storms, which is typically very welcome for our weather and exciting. And I am excited about that, but that's also a little bit of sarcasm because the storm on Saturday night took my patio roof with it. So we are currently in the debris cleanup roof repair replacement fund. So I'm hoping that's the most mega monsoon excitement that we see. So again, I am Jenny Moreno, and I am of 2CFR Clarity. I am a MyFed trainer certified national instructor. I've spent more than 20 years working with and training, coaching nonprofits and businesses. The last 5 of those have heavily focused on grants federal compliance. So I don't believe that effective compliance comes from having all the answers. Really, nobody has all the answers at all times, including me, and including the auditors. So it really comes from learning to ask the right questions. And that's what today is really about. So, not about memorizing regulations, but really learning the questions that we can be asking so that we can find our blind spots before anyone else does. So, I also want to remind us that, like Nina said, this is a 101 level training. Compliance under federal rules is pretty deep. People spend entire careers, right, digging into this information. And so, with our 1 hour together and a genuinely complicated subject, there are whole sections of the regulations that we just simply won't have time to even cover. So my goal isn't to, make anyone an expert in an hour. We all know that's not possible. But my hope is that we'll walk away asking more questions, questions about what we don't know yet, and hopefully doing that as a team. Starting to explore where some of our compliance gaps might exist, and then learning where we can go when those questions arise. So if you leave with a clearer sense that there's still more learning to do, still more building of systems to do, and a picture of the subjects that you want to focus on next, then to me, that's a successful training. So I want to give you our roadmap for our together time today. So first, we'll cover some fundamentals. What actually makes a federal grant different from other grants that you might encounter? And then where do those rules come from? So if you're here because you're still deciding whether to pursue federal money, that part's really critical. And then second, those systems. So there's 5 essential systems every grantee needs, no matter how small the team is. So even if your whole grants department is like one person or two wearing all these multiple hats. And then third, we want to talk about stewardship. By the end of the hour, I really hope to increase the idea that compliance is not just a burden to carry, but it's something that helps build trust and can make your organization more competitive for future awards. And then Nina already talked about the recording, so you can come back and reference the information later. Okay, so here's a question I hear all the time. We've managed grants for years. How can federal money really be that different? And the answer is it really is different enough that consistent training and keeping up with the shifting rules is imperative for protecting your organization and also for protecting the people who work in the organization. So let me show you a little bit about what I mean there. So federal grants are public funds that are governed by federal rules. So every requirement that I talk about, either in this hour or in other classes that I teach, traces back to those rules. So if we think about that foundation grant for a moment, so you may build a relationship with that funder, deliver on the work, send in a report or two. Usually there's some grace and flexibility. Maybe plans shift and that just requires a conversation. Federal money works very differently because it's taxpayer money. It's appropriated by Congress and the rules follow the money wherever the money goes. So really, it's not always just a question of did we do good work with the money? It's also, can we show with documentation that every dollar was handled the way the rules require it? So those are two very different questions, and the gap between those questions is often where compliance trouble tends to live. So what's actually at stake? So on this slide, you see 4 things, and I'm always honest about these, not to be dramatic, but because we deserve the real picture, right? So audit findings are there. So those are documented violations. They don't just get filed away. There's a process for dealing with findings. They have to be corrected. They also need to be reported to either the pass-through entity or the federal agency, and they follow each organization into future risk assessments and future funding applications. So they also become public record on a public government website. And then we have those repayment obligations. So they're exactly what they sound like. If a cost can't be justified with documentation, it's possible you may have to return that money, even if the work was beautifully done. And that does surprise unprepared organizations pretty much every time. We also have that reputational risk because your compliance history, as I said, it travels with your organization. It becomes public record. And then that future funding eligibility. So a pattern of non-compliance can disqualify an organization from competing for future federal funds altogether. So avoiding these risks really comes down to having strong systems in place, clear proof of the work that was performed, and clear documentation of the spending, and having policies that align with the federal rules. So it's not about perfection. These are things that even small organizations can absolutely achieve with a lot of hard work. Then I'd actually argue that small and rural organizations have an important advantage here that sometimes doesn't get acknowledged. There's less red tape. The money and the decisions happen closer to the work that's happening. And one good habit can quickly spread through a small team very fast. Small organizations can change compliance culture over a staff meeting and a pot of coffee. And that's just not true in larger organizations. So it's something that can really be celebrated and acknowledged in smaller organizations. All right, so what governs the federal funds? So where does this live? So those rules live in one place typically. There's some that are extra, but this is the main place they live. It's Title II of the Code of Federal Regulations. That's where CFR, the title, comes from, and it's in Part 200. So you'll hear that called 2 CFR Part 200. And that's the uniform guidance, soon to probably be called the Uniform Grant Regulations. And so in plain language, it's the single rule book for how federal money must be managed. And it applies across all agencies. So what's interesting is before 2014, every agency had its own set of rules, which meant A small organization with, say, 2 grants from 2 agencies was juggling 2 very different rule books. So the uniform guidance really consolidated all of that into a single framework. And honestly, that's a gift. So, who does it apply to? Every organization and every staff member who touch federal money. And we want to slow down here because this is where small and rural organizations sometimes get surprised. You don't have to receive a check straight from a federal agency for these rules to apply to you. If you receive funding from a state agency, a county, a council of governments, another nonprofit, and that money originated as a federal award, then you are likely a subrecipient. And these regulations travel with those dollars all the way down to you. It's hard because I have sat with organizations who've actually been managing federal money for years without realizing it. Typically, the confusion comes from not reading their grant agreement. And we're going to talk a little bit more about that grant agreement in a few minutes here. So there's a question worth asking. Do we know for every grant we have what the original funding source is? And if we're not sure, we need to ask our funder. That single question can save organizations from very unwelcome surprises that might creep up later on. And then that question of what does it cover? So it covers a lot of ground. We're going to cover some of those things. We're going to touch on some of those things today, but it's things like financial management, procurement, internal controls, cost principles, reporting, record retention, audits, subrecipient monitoring, those written policies and procedures that you're required to have. It's a lot. So when you wonder, is there a rule about that? The answer is usually yes, and it's in Part 200. So this matters right now, especially because the uniform guidance is not frozen in time. It was revised in 24, and there's another set of big updates that's in process right now. Many of you, I'm sure, have read some or heard about that. So those are expected to take effect in October of this year. It's a pretty fast implementation this time. So we want to treat what you hear today or in any training as a foundation, but we always want to make it a habit to confirm the current rules. And we can always do that at ecfr.gov. And we also want to read everything our federal agency sends us, okay? Knowledge is our protection. And part of that knowledge is knowing we have to stay up to date and be checking for those updates. As far as those upcoming changes, I have created a free reflection tool, and that goes over some of those changes. And I've added questions that organizations can ask within their teams and within their organization. So if you want to check that out after the training, I think it might be in our resources, but it is also on my website with a link to a Google document. So pretty easy to access. So if Part 200 is the rule book, is it the only set of rules you have to follow? Not quite. So there's a pecking order, and knowing it can help save confusion because sooner or later you might find documents that kind of seem to disagree. So it's like, okay, well, what do we go by? So at the top here sits the federal regulation. So again, we just talked about that. That's the highest authority for federal funding. Then below that comes your award terms and conditions. Those are the specific requirements written into your award or your subaward. And those can sometimes be a bit stricter than the uniform guidance. So specific programs can absolutely say, well, the general rule allows this cost, but for this program, we've determined that's not allowable. So we have to pay attention to those nuances. Then below that, we have agency specific requirements. So HHS, NIH, EDA, USDA, they can layer on some additional expectations, and those again flow down and follow the money. And then at the bottom there, you see your own organizational policies. So those must be at least as strict as everything that comes above them. So if your policy requires, say, more quotes than the federal procurement rule does, then you need to follow your stricter policy. So let's say that someone on the team says, okay, well, our policy allows this cost, so it should be fine to charge to the grant. So then we have to think, well, what are some next questions that we can ask? Well, we want to say, well, what do the terms and conditions of our award say? And what does the regulation say about that cost? And if we're still feeling a gut unsure feeling, then what does our program officer say about it? So that's really the hierarchy of the authority that we need to be questioning when we come up against something that seems to maybe have contradiction or where there's that confusion. All right. So stewards of public trust. So federal funding is public trust made tangible. Tax dollars entrusted to an organization is an honor, and it comes with a beautiful upside. When funds are managed well, that trust doesn't evaporate at the end of the grant. It becomes a track record. And that track record is what can help win future awards. So trust, we know, is built over time. And I'm sure we've all experienced that trust can also be broken very quickly. So that's just true when we are stewarding public money. So agencies do look at past performance. They look at adherence to the compliance rules. They look at prior audits, and they do this as part of their risk assessment when they weigh new applicants and new applications. So one piece of that accountability structure is that single audit. So currently, if your organization spends $1 million or more in federal funds cumulatively across your federal awards in a single fiscal year, then you're required to have a single audit. So that's an organization-wide audit of how you manage federal funding, and that's done by an independent auditor. Typically, that's at the cost of the organization. That also surprises a lot of nonprofits in particular. So here's a reminder. That threshold is the current threshold. And again, these things can shift and change. So it's always important to stay watchful of the audit rules. So notice the word cumulative there, because a lot of times growing organizations can get caught off guard. It's not always one big grant that triggers this threshold. 4 smaller awards can add up across that line faster than you think, especially in a year where you might have been awarded more than one grant. So if you get anywhere near that neighborhood, it's really worth looking closer at audit readiness sooner rather than later. And then we also have alongside that the SEFA, which is the Schedule of Expenditures of Federal Awards, which is simply put the report that lists all your federal funding for the year. So in my coaching, I encourage organizations to keep SEFA style records, even if they're below the threshold, because that question of how much federal money are we managing, it always will have an instant accurate answer if we keep those types of records. So it's important also to know that program audits and monitoring visits can happen at any spending level. They do not have to reach that $1 million threshold to happen. So the threshold triggers the single audit, but it doesn't mean that no one will look at things otherwise. So we want to be asking ourselves regularly, if an auditor asked you tomorrow for documentation showing how each dollar was spent, and they asked to see the systems that are in place that prevent waste, fraud, and abuse, could we easily show them? And if our honest answer is not yet or not really, that's a gut feeling to pay attention to. It's really an opportunity to find the gaps, assess those risks, and then address them. And you can do that on your own time if you're the one that's finding the gaps and assessing the risk. All right. So let's talk about that award system. So we're going to talk about a notice of award. The document exists the day you get the award and sign the contract. And this is a binding contract. This document is, I would nominate it as the most skimmed and least read document in the entire grants world. And that's a big mistake. People celebrate the congratulations page. We're so excited we got the award. We're like, wow, this worked. We actually got the funding. And then they forget to dig into the details of what they have committed to and agreed to. It's a binding contract. It's really important that it gets closely looked at. So let's look at a little bit of what should be in it. So your notice of award or Notice of Grant Award, which is how we get those acronyms NOA and NGA. It's the guiding document for your specific grant. So everything we talked about in that hierarchy of authority gets really personal in this document, and it absolutely deserves more than a quick skim. So first, we want to read that fine print. And I like literally mean read the fine, every word of it, because special conditions and agency expectations can hide in the later pages of that contract. And sections might be titled things like terms and conditions continued, or special provisions, or prior authorization requirements. That's often where you're going to find special reporting requirements, maybe forms that you haven't seen before that are now required for this program, restrictions maybe you haven't seen before, conditions that are placed on the program, or potentially conditions that are placed on your organization. So we want to read it multiple times. We want to read it as a team. And the team part really matters because the finance person is going to catch things that a program person won't, and vice versa. So one person might see the words quarterly financial report, and they know we need to start building a calendar now. And that other person might see the words performance measure, and they realize data collection needs to start day one. So in a small organization, reading this as a team could look like two people at a kitchen table, with their tea or their coffee, with their highlighters, and that counts. What's really important is that more than one set of eyes pours over it, and that it's accessible at all times, and that you refer back to it regularly. And then that document tells you exactly which rules apply. So it'll point to the regulations that apply, the agency requirements, and those special conditions for the award. So if you've ever wondered, well, how would I even know what rules apply to my award? This is where your answer lives. And then those key fields. So it should have your award amount, the period of performance, those deadlines, those all live in this document. And, a habit that really can help prevent headaches is to create that shared calendar with reminders that are set weeks and months ahead of deadlines. Those deadlines, especially in small organizations, they can't just live in one person's head or in one person's calendar, because missed and late reports are a very common grantee issue, and it does cause delayed funding. And it's very preventable with some really good planning around reporting. And then those prior approvals. So we pay close attention to this one because some expenses need the agency's written approval before you spend the money, even if that expense is sitting right in your approved budget. So it's important to note a budget approval is not a spending authorization every time. Equipment purchases are a really classic example of this. So if your notice of award flags something as needing prior approval, the rule is very clear. You ask first, you get that approval, and then you spend. And when you're in doubt, you're not quite sure, does this fall under it? We email our program officer and we ask for clarity, because asking in writing creates that paper trail that's so important for this. All right, so we're going to head into our systems. Okay, so it should be clear, federal money is very different. We know where the rules live. We know the document that should govern the award specifically. So now, how do organizations who thrive with federal funding actually do it? At minimum, they have 5 systems in place. And remember, a system can be a spreadsheet and a routine. What matters and what makes it a system is that it happens every time the same way, no matter who's doing it that day. It's consistency. So we start with system 1, which is financial tracking. So this is knowing where every dollar goes. The core practice here is separate cost accounting, which means we track income and expenses by each individual award, never lumping them together in one general fund. Each grant gets its own lane. So here's a picture of what that looks like in real life. Let's say we have 2 grants and your general operating funds. If all of that were to flow through one cost account, and then someone were to ask, I don't know how much has been charged to federal award A. The answer is going to probably be one born of panic and an afternoon of financial archaeology. And we do not like that. We do not want to experience that. So when we have clear, separate tracking, The answer is now a report that we should be able to pull in a few minutes. And that's exactly what auditors and agencies need to be able to see. They want to see where every federal dollar went, line by line. So most accounting software can do this with things like classes, fund accounts, tags. And honestly, in very small organizations, a well-built spreadsheet can also do this. Having a tool matters, but the habit also matters just as much. Every transaction getting coded correctly to its award when it happens, not sorted out later. Worse yet, not doing it at report time. Okay. And then that third piece of the slide, unallowable costs do not vanish. So it's important to understand that organizations have real costs that federal funds are simply not allowed to be used for. And those costs might still be perfectly legitimate for you. They just have to be paid from other money sources, never with grant funds, directly or indirectly. I do see organizations get in trouble here because it can be confusing. I totally get it. But simply put, we cannot pay for unallowable costs from, say, the general fund, and then quietly use indirect costs to cover that cost. The money trail has to show that federal money never touches unallowable costs. So clearly tracking what you didn't charge to the federal award is just as protective as tracking what you did charge to it. So let's look at system 2. So this is about budget and spending, which builds right on top of system 1. So this is, if system 1 tracks where the money went, this system makes sure it goes where you promised it would. So this is, what your approved budget is. It's a promise. Your spending needs to match the budget, the categories that were approved, and the award terms that you agreed to when you signed to accept the money. But here's how the drift happens in real life. It's rarely a dramatic shift. It's a little bit more supplies this month than we planned, maybe a little less in travel, staffing change that shifted some salary lines. And months later, the actuals and the budget are telling two different stories. And when life happens, because it does, right, we genuinely may need to move money between categories or change how the funds were used. Remember, budget and program modifications generally need agency approval before we make the change, not after. So again, there's our prior approval theme. Ask first, spend second. Agencies usually will say yes to reasonable requests. They don't typically do a blessing on retroactive changes. So that's really important to remember. And then RNAC is a 5-letter acronym that I use. I know some people leave the C off the end, but I like to use the 5. And that's going to get its own slide because it's a very helpful tool. And so we're going to talk about that next. But I do want you to consider 2 questions that are on this slide. How often are we reviewing spending on our grants and comparing it to the approved budget? If the answer is, we do that when the reports due, that is too late to catch the drift, while it's still small enough and fixable. Monthly tends to be a good rhythm for most small organizations, even if it's a 30 minutes over tea and coffee and having that budget to actual report in front of you and really looking at how is the program doing, not just in spending, but also in our success measures. And then second, do we have a budget policy in place? Is it written down? Who creates the budget? Who reviews the budget? Who approves it? How often are they doing this? And who has the authority to request those changes with the agency or the pass-through? So if we look at RNAC, this is an important decision tool that I really like to encourage organizations to use before any cost is charged to a federal award. These do come straight from 2 CFR. It's in 403 through 405. The A is for allowable. So is this cost permitted under your award and under 2 CFR? Again, some costs are simply off the table for federal funds, no matter how good the reason feels in the moment, and your award might restrict that further. So this is the check the rules question. And again, it's why knowing where your document lives really matters. And then the R is for reasonable. So would a careful, responsible person pay this price for this purpose. It's often called the prudent person standard. So, would a sensible person in another organization, maybe in our area, spend this much on this item? Reasonableness may need its own documentation, and that's going to also depend on the procurement threshold that's being followed. So, that's also part of procurement. The N is for necessary. So, is this cost genuinely required to carry out the award's objectives? Not, well, it would be nice to have, or, while we're at it, we might as well. And definitely not, but the budget has room for it, right? Actually required for the work you promised to do. The Costco effect tends to come into play here. And I know that you know that feeling, even if Costco isn't your jam. We walk into the big warehouse of wonders, right? We know we're there for toilet paper. This is what we've gone in for. And suddenly we're walking out with the deal of the year on a big TV. So we have to be very careful of the Costco effect when we're choosing our spending and deciding if things are necessary for a grant. All right. And then that second A is allocable, which is just a fancy word for, does this cost directly benefit the award it's being charged to? So if something benefits more than one program, the federal award should only pay its fair share of that cost. And that's called proportionality. So we can't charge an award out of convenience. And we never want to hear the words, just charge whichever grant has money left. Okay. So that does not follow allocable. And then that C is consistent. So is the cost treated the same way across all of our funding sources? So if it's the same kind of cost, we give it the same treatment everywhere, every time. Consistency is its own kind of proof because it shows that our decisions follow policy rather than the pressures of a moment. So I do know some organizations who run every purchase past this list, maybe on a little checklist, maybe through their head. It takes about 30 seconds, and the habit is a real compliance system. And it really can help catch problems while there's still questions versus after the decision has already been made. All right, so we're going to move into system 3, which is vendors, contractors. So this is about how you buy things and how you choose the people you buy from. So the formal word for it is procurement. It's important to follow a process and document it every time. So when federal money is involved, how you choose a vendor matters just as much as who you choose. So you might pick the best vendor in 3 counties, but if there's nothing on file showing how the choice was made, especially when we're talking about higher thresholds, then we can't prove the selection was fair, competitive, and unbiased. And 2 CFR requires those things. So that documentation is your proof of that. And then how much process is required depends on how much money. So that's where those thresholds come in. So micro purchases, small purchases, and formal bid thresholds each carry their own rules. And that documentation requirement steps up as the dollar amounts go up. So at the micro purchase level, the requirements are less than large purchases. So we move into formal competitive territory, solicitations, RFPs, evaluation records. So your homework here is really to find out which thresholds apply to your organization, because your award terms and your own policies might set stricter limits than those federal defaults. So it's knowing on this grant, what are our specific thresholds? And then I do want to speak directly to my rural folks for a second, because I often hear and feel the question forming, but there's exactly one supplier within 100 miles of us. So what do we do? The answer isn't panic, and it's definitely not to pretend that we ran a competitive process when that wasn't even possible. The answer is to document the reality. We write down the information about the market that we exist in. What did we do to check for alternatives or to research what else we could have used? And why is the choice justified? A documented sole source vendor or contractor is sometimes defensible, but it also typically needs agency approval. But silence is never the answer on it. We want to make sure our documentation is solid if we're going to have to use a sole source contractor. And then the 2 questions on the slide: could we clearly explain to an auditor how each vendor or contractor was chosen? And do we have a conflict of interest policy that addresses the selection and gifts? That second one is a requirement of 2 CFR. and it protects your people as much as it protects the money. You know, in a small town, the vendor might be somebody's cousin. That's common. That's not uncommon, right? But it's imperative that staff members are able to document the potential conflict. You get to assess the risk that it could pose, and they may have to step back from authority in the decision making process when they can. You know, a good policy in this area gives staff protection from those conflicts of interest and will provide a graceful exit from decision making when necessary. So this is really important to have to protect staff, not just an organization or the money. So system 4 then moves into subrecipients versus those contractors and vendors. So misidentifying this relationship is really one of the most common audit findings in the federal grants world. And the concept is pretty simple. When your organization passes money or pays federal money to another organization, contractor, vendor, they are one of two things, right? So a subrecipient carries out part of your program. They're making programmatic decisions, delivering a piece of the mission. Maybe they're being measured against the award's objectives. In contrast, a contractor, which is sometimes called a vendor, provides goods or services to your program. So you're buying something from them the same way that they would sell it to another customer. So why does this label matter so much? Because completely different federal rules attach to each one. So subrecipients inherit compliance requirements from the prime award. Prime just means the organization that got the federal money straight from the government. And you become responsible for monitoring them. Contractors go through the procurement process that we identified. And there are rules that govern contractor contracts and those relationships. So when we get the classification wrong, somebody can end up carrying obligations they didn't know about, and we may end up skipping oversight that's required by 2 CFR. So it's important to remember the substance of that relationship decides what category they exist in. We can't just base that on the label that might have been assigned to the paperwork. We really need to look at the substance of the relationship. And then flow down provisions. So when you get or give a subaward, the requirements of the prime flow down. And those requirements can apply even if that agreement never spelled them out clearly. And this cuts both ways. If you receive funding through a pass-through entity, you may have inherited obligations, which is another reason to ask, is this federal funding? Are all of my provisions in my agreement? And if you're the one passing the funding down, spelling out those provisions clearly isn't just good practice, it's really protective for your partners. So nobody should have to discover their inherited obligations, particularly the first time during an audit. And we do see that sometimes. So the questions we have for this system, have we classified every partner accurately based on their actual relationship to this program? And if we grant or receive subawards, are all of the provisions spelled out clearly in our agreement? If we're unsure on either one, it's a really good time to review those pieces. I might actually add another question that I didn't put on this slide, which is, are we documenting our SAM.gov checks for every subrecipient and every vendor? So that is a requirement of 2 CFR. Okay, we're doing great. You're hanging in there with me. So we're on system 5, and this is the one that kind of holds everything together, which is documentation. I came up with kind of a fun phrase because to me, if you can't make compliance fun, well, then it's just painful. So I use the statement, without a paper trail, it's just a fairy tale. You can do everything right. You can hire well, spend wisely, deliver beautifully on a program. But if you can't show documentation for it, then from an auditor's perspective, it might as well not happen. Documentation is where good work becomes provable work. So the rules state documentation should be adequate. It doesn't say perfect. Nobody expects a 5-person organization to produce corporate grade paperwork. What your documentation must clearly show is who initiated a purchase, who authorized it, when did those things happen, and I'll give you a hint, it should happen before the purchase happens, and then for what purpose was it approved? How does it directly connect back to that specific award? So there's two qualities that make sure that story holds up under scrutiny. Again, real time, not retroactive. Records should be created at the time of the transaction and they reflect decisions as they happen, not assembled after the fact. If you ask anyone who has had to rebuild records, particularly right before an audit, reconstruction of documentation is a nightmare. It's miserable. It eats up time and it's really never quite convincing because reconstructed records have a certain feel and look that auditors, for the most part, recognize immediately. So one honest record today is really worth more than a polished recreation later. And then that understandable to others. So it's a test I would encourage you to actually run. Maybe pick an expense or a file and hand it to someone in your organization who doesn't really know much about the grant. Can they follow the story? What was bought? Who approved it? How does it connect to the award? Because that's exactly what an auditor is. They are a well-trained stranger reading your file. So if the story of the grant and the expense answers live in our heads or in a file that the logic is only understandable to one person, then the documentation isn't adequate and it's not finished. And in small organizations, I would say this really doubles as your continuity plan because people retire, people move, people get promoted, people win the lottery, we hope. The file really has to be able to speak for itself when they are no longer there. All right, so what actually needs a paper trail? So the short answer is as much as possible when you're managing a federal award. But if we look at our sample list here, we have our policies and procedures that are written down, because again, as far as an auditor is concerned, an unwritten policy doesn't exist. We have policies for procurement, conflict of interest, finance, allowability, travel. Those are just a few examples. Your procurement records, everything we talked about in System 3, those quotes, selections, justifications, equipment tracking, contract terms, all those things. Personnel activity is also called time and effort reporting, or T&E. We're going to get a focus slide on that, so hold that thought. And then program outcomes and performance, because we're not just proving the spending happened, we're proving the work and the program happened and was successful. So evidence that the work was funded by the award was accomplished through progress reports, deliverables, and that data you're collecting. And then those exceptions, modifications, and cost approval. So I want to underline that last one because unusual or outlier decisions need the best paper trails of all. If you ever hear yourself or someone in your organization say, just this once, we'll do that, that is a moment for pause. We write down the situation, what's being decided, who's approving it, and why. The routine stuff tends to have processes that help documentation happen along the way. The exceptions are where memory fails later and uncomfortable questions often land. So again, if it's truly a head scratcher, we get our program officer or our pass-through entity involved earlier rather than later. I'll be honest, program officers really hate surprises at reporting time. They would rather know something's going on earlier rather than later. And actually, I'll say one more thing. If you need to deviate from your approved budget, change how a cost is being handled, or shift grant funded personnel, document very thoroughly. So you most likely already generate some of this documentation like in the normal course of doing work, things like invoices, timesheets, approvals. So it's not really about creating mountains of new documentation. It's really about catching what you're already producing, making sure you're keeping it safe, knowing where it lives, and organizing it so that it tells the story without you having to stand there next to it explaining it. All right, so that time and effort reporting piece. Many small organizations kind of get caught on this one because auditors really focus here because time and staffing charges make up a lot of the bulk of grant money. So they tend to focus very heavily here. When everyone wears multiple hats, that question of, well, whose time went where, it really can get blurry fast. And so we want to be as clear as we can on this. So if any part of someone's salary or wages is paid with federal funds, their time needs documentation that meets the standards under 200.430. So that includes employee's name, project, the funding source, and we don't want to just say grants. We want to be very specific about the funding source, that pay period and the specific dates that are covered, the percentage of time on each award for federal versus non-federal. So the full picture of the person's time needs to be visible, not just the grant funded portion. And then the actual hours or effort worked. So this means what really happened that period, not what did the budget predict. So oftentimes auditors will see timesheets that are consistent across long periods of time. And they know that that tends to mean that they're not reflective of actual work performed. So we know that program needs fluctuate, vacations happen, priorities shift. If a time and effort record looks the same for a long time consistently, it will raise red flags. So that's just a note to be aware of. We have that employee signature and the date, and then the supervisor, someone with direct knowledge of that person's work. So a record that misses any of these details will not withstand audit scrutiny. So I suggest typically that organizations pull a few records like this and just check it against the elements and see, are these consistently there? Deep breath. Okay, so those are the 5 systems. Look at us go. So financial tracking, budget and spending, procurement, subrecipients and contractors, and that documentation. There's a term that ties them together, internal controls. So we don't have time to cover internal controls in depth today, but that's really the checks and balances that are built into how your organization handles money and decisions, so that no single person has total control from start to finish. So that might be the person approving timesheets is not the same person who signs paychecks, bank statements getting reviewed by someone who's not doing the deposits or writing the checks. You know, if you're a 1 or 2 person or small team, you can still build this in. It might need to be a board member or an executive director or say a finance committee that can do some of those reviews. So the point is making sure that no single decision or dollar moves through only one set of eyes or hands unchecked. So our slide asks the question, do our policies match our workflow and culture? Let's be honest, anyone can download a generic policy template off the internet, and it might even follow the current 2 CFR rules. But a policy that describes a workflow that you don't actually follow is not protection for anyone. It's actually trouble brewing. Stewardship is not just about protecting the money. It's also about stewarding power and doing it in ways that protect the dedicated people in your organization. So clear policies and procedures and strong internal controls can help you accomplish this. The goal really is never just a binder on a shelf or a Google folder that no one knows about. Sometimes I ask about policies and procedures and someone goes, I think that's in our Google Drive somewhere. That's probably not going to get everybody on the same page. We need to know that we're training on it, that we know what's in it, that we are following it as a practice. So we want solid ways of working, communicating as a team, processes and policies that match our workflows, that match our culture, and that our team can actually live with and function well under. So it's really about creating a positive culture of compliance where questions are encouraged. It's important to me. People know where to go for help, and they're not afraid to speak up when they see an issue. And by the way, that is part of having whistleblower protections, which is another 2 CFR requirement. You know, the list of policies and procedures that are required is fairly long, but again, a good policy doesn't have to be over the top complicated. It really just needs to cover the required elements and be consistently followed by your team. So, strong systems do more than reduce risk. They build trust with funders, with the public, really, and with your staff. And they position your organization for opportunities that you haven't even applied for. So when a funder sees clean records, honest reporting, on-time reporting, right-sized systems, you look less like a risk to manage and more like a partner to invest in. So I have actually created 2 resources. The first is just a simple compliance key terms, some of the language that comes from federal grants, because this this language can tend to be its own language, right? So it can help to have some of those key terms defined. The second one I'm pretty excited about, which is a simplified gap assessment, which is where do I start? And really, what it is it's a set of questions to walk through with your team. And it's built around some of what we covered today. And that has a not sure, not yet column. And that's the really valuable piece on that worksheet. So every one of those answers is a blind spot that you get to find before a monitor or an auditor finds it. That now becomes a question you get to answer on your own timeline. So I want you to think of the worksheet as a flashlight, not a report card. We're really just lighting up corners of the room that need some attention. And I also want to show you if your team learns better through stories rather than reading regulatory language. I know that I do. I have tools, some more tools for your compliance and partnership journey. So with a co-author, Angela or Angie Donaldson, we've written 2 compliance workbooks, and that's the Money Trail and Lines You Shouldn't Cross. That's the green and the blue ones. And those are written in a peer learning discussion format. And that's really so that teams can read a short story together, identify the compliance issues, and then ask the question, could this happen here? That question, I believe, asked in a safe space is really one of the best compliance tools that I know of. And we truly believe that compliance, really at its core, is this: it's someone doing what they said they would do to an agreed upon standard with evidence they can point to. We also have that purple book, which is your seat at the table, and that was written by Angie for organizations navigating complex partnerships in government, nonprofit, cross-sector work. It equips leaders with practical field-tested frameworks for holding partnerships accountable to what they said they would do. So if you're interested in learning more, no pressure. There's a QR code on that slide. It'll take you to those materials to check those out. They're at intrustsource.com. So I want to say thank you before we wrap up to Local First, to the Arizona Economic Resource Center, and to their partners, for making trainings like this and for the whole workshop series free. That's exactly the kind of investment in small and rural teams that changes what's possible for organizations. And I'm really honored to be a part of it. So I'll leave you with my contact info here. I genuinely would love for you to reach out and let me know how your gap assessment goes. And I'm also curious if that reflection tool is at all helpful, because I'm always open to feedback and how to improve things that we put out there. So I'm going to kick it back to Nina and Robin. I know that I'm just like fast and furious. I don't like feeling like a fire hose, but I do like to make sure that I give as much robust information as is possible in a very complex set of information. So.
Absolutely. No, thank you so much, Jenny. This was fantastic. And like you said, it's a lot of information up front. I'm getting a lot of notes in the chat here of appreciation of how thorough and helpful this workshop was. So thank you, Jenny, so much for doing that.
Yeah.
Considering the time, I might just kind of wrap us up here. My colleague Robin dropped in a link to a survey. If you could let us know and also some other resources for you. But if you could let us know how you've appreciated the workshop series, we want of real feedback so that we can continue to improve, share with our contractors, and then also if there are other workshops that would help you in your particular situation, that's a great opportunity to share that with us as well. Beyond that, you're on our list now for these workshops, so you should be receiving this recording in the next couple days, as well as it will be accessible on Local First Local Learning Lab, kind of in perpetuity. So like Jenny said, this stuff does change. So take that with a grain of salt and make sure to keep in contact with someone like Jenny. Her contact information is on the screen. And just know that this is a complicated process and you don't have to do it alone. So please be sure to reach out, get the support that you need in order to be that quality applicant to then get new grant resources in the future. So thank you so much for being here, and we really appreciate it. Find our other workshops as well on the Local Learning Lab. So with that, cheers to the end of the workshop series. Jenny, what a way to end it. And thank you to everyone else.
Thank you.
Bye now.
Thank you.